welcome you to today's meeting with Ayodeji Ebo of Afrinvest. So I hope we all can hear me. If you can hear me, please let's signify in the chat box that yes, you can before we kickstart today's session. Please, can anyone confirm? Okay, thank you. I have someone. Okay, great. So, Mr. Ayodeji Ebo is the MD of Securities at Afrinvest, um, West Africa, and you'll be taking us through um, the topic: are there opportunities for retail investors in this crisis? We've been it's a whole new environment around COVID-19, and yeah, we need to assess if there are still opportunities for the small scale investors in Nigerian market or the global market as it were. So yeah, I'll be handing over the control to Ayodeji Ebo. Ayodeji Ebo, over to you, sir.
Okay, yeah, thank you. Good evening, everyone. Thanks, Yinka. Thanks for the opportunity to present to this wonderful group. And I hope at the end of the presentation, we'll all have found one or two things useful to help us weather this storm. So I'll be walking us through. I also have on the group my colleague that worked with me on this presentation, where the header. So when we also get to the question and answer session, she would also be willing to respond to some of the questions. Yeah, so I'm going to briefly walk us through some of the opportunities as retail investors that we can lay our hands on in 2020. So I'll try uh, to summarize the discussion into 5 major sections. The first 2 will just be a brief history of background of things that some of the things we already know about, but it's also always good to build a background before going into the main discussion. So we'll be looking at the global impact, also coming home to see how that has impacted in terms of Nigerian economy as well as the populace. There will also, especially for retail investors, a view of the equities market is also an area that we should be interested in, and would also do justice to that. We'll look at some other investment opportunities that we can take advantage of as retail investor, and wrapping it up with building a recession-proof portfolio, especially for the retail investors. And we'll wrap up with the question and answer session. Yeah, so in the global space, we've seen what the unexpected, that's with COVID-19, coronavirus, what it's done to the supply chains across the globe. We've seen how that has also impacted in terms of unemployment. Just yesterday, we saw the World Economic Outlook by IMF was published, and can see that for most of the economies, even for both developed and developing economy, the projection is that this year, most economy will go into recession. And as a result of the COVID-19, which has caused in terms of lockdown, also we can see how it has impacted on commodity prices across the globe. This chart just x-ray in terms of the number of deaths across, and in terms of COVID-19 cases across on the continent. This is we're trying to also look at how it's impacted in terms of the top economies that have been impacted based on confirmed cases. We can see that for the US, they are ranking top in terms of number of confirmed cases. Though for some of these economies, because of the way they already have a structure, so for some of the palliatives which they are able to put in place, some of them are trying to support the small and medium scale industries by even paying part of the salaries of the employees. Also, for some of the stimulus packages that have also been arranged, those for them, the transmission mechanism is very strong that you see that impact in the economy. And because they already have the data structure, not like what we have here in Nigeria. This just summarizes in terms of year-to-date market performances. We can see they are um, all in the south. We can see all the market across the continent, all in the south. Within the period since the pandemic started, with the foreign investors have put over $83 billion from emerging markets, which Nigeria is not excluded, and that can also be seen in terms of our performance, 21.5% down. Now coming home, we can see in terms of the number of tests per million, about 27, which is really very low. Though confirmed cases still looks still looks low compared to what we've seen in most of the developed climes. And recovered cases looks very encouraging. That's about 25% when you compare that to the total of confirmed cases. And number of deaths, casualty is about 2.9%. Yeah, so I thought it's also necessary looking at the last 10 years just to also form a background in terms of what's obtainable. We can see it's a decade of two halves. Looking at the exchange rates at average about 148 in 2010 to 2014. In 2015 to 2019, about 362. Just about 2 or 3 weeks ago, the adjustments at the I&E window by the CBN from 380, and which for us, we still feel is not still sufficient. It's not still sufficient, and we're still expecting that upon once the lockdown is over, we still feel that based on pent-up demand, it's about close to about $1 billion. We will expect that there will still be further adjustment, and also the demand that we may see even after the lockdown because of people that may need to travel, and that would be very significant. So we may see further adjustments. We are projecting about 10 to 15% further devaluation. In terms of economic growth, we expect that we had initially projected a growth rate of about 2.4%, but with the COVID-19 crisis, which has led to significant drop in terms of crude oil prices, we were projecting that Nigeria, the growth rate may decline by about 8%. And even looking at the WHO report yesterday, 2021 projection for Nigeria is about 2.4%, which still lags behind our population growth rate. So things are not really looking rosy. We are looking based on the outlook. Inflation rate, we know a lot of the pressure points. Electricity tariff has been deferred by about 2 months. We also know in terms of even the petroleum sector, what we call price modulation, they intend not to for government not to finance or subsidize petroleum going forward. That would impact once oil prices also moves up. That would impact on the price we would have to pay going forward, which has direct effect on prices. That is another major impact. Coupled with devaluation, would impact on inflation. And unemployment rates that has continued to skyrocket. Though the statistics have not been updated as at when due, but we know that even with this lockdown, a lot of companies are already downsizing. Those that are not downsizing currently are trying to also cut down salaries, because if demand is reducing, then it means that revenues will also decline as a result of that. Um, you can't continue to sustain your fixed costs, so you will need to do something to your fixed cost, which is for you to remain sustainable. I think I've also discussed these as just some of the projections regarding some of the macroeconomic indicators. In terms of a broader implication on the economy that we've seen, uh, we're expecting, remittances has been a major support even for the Naira. Last year, remittances was about $25 billion. We expect that that will decline significantly this year, because even a lot of those that are in diaspora have lost their jobs, or your salary has been cut. So in terms of what you would also be sending home, or that would have reduced, which would also impact on the greenback, and that as a result may lead to further adjustment of the Naira. Where we've spoken about weaker growth in terms of poverty levels, that we, as long as continue to grow at a rate at which that is lagging behind population growth rate, it means that the standard of living will continue to wane. And looking at the fiscal conditions, yes, budget has been reviewed downwards. But we can see that the deficit have increased to about 5.2 trillion. Capital expenditure is the one suffering the most, which has been reduced by about 25%. But if you look at in terms of actual revenue, even the last 4 years, has averaged around 4 trillion. So even if government is trying to project in a year where there's no COVID-19, a year where average crude oil prices are around $50 to $60, you are making just about 4 trillion. So this year, with these current challenges, even with their projection of a 5.2 trillion deficit, we feel that it's not realistic in terms of the projected revenue. So our projected revenue has been revised downwards to about 2.5 to 3 trillion. That is if this crisis is not prolonged. So now coming straight to some of the areas where for us as retail investors that we can easily, if we understand how it works, we can easily take advantage of, and can also help us to earn return that is above inflation rates. So that in terms of our real return will be positive. This chart just x-ray the last 10 years. We can see that the equities market is good to establish that can be very volatile. We can see in 2009, in 2012, we can see 2016. So, and this is 2019, can be very volatile, but you can also see that prices will not always remain low. No matter the challenges that we see, they won't always remain very low. So currently, we know that prices are also significantly down, and this just presents that it's for opportunity for retail investors. There's no minimum entry level into the equities market. So as we progress, you see some of the opportunities that you can take advantage of. Even the last 10 years, looking at on a compound annual growth rate based on a Naira return, is positive about 28.9%. Looking at valuation, which is critical, we can see that looking at the last, if you look at the last five or 6 years, the current price to earnings multiple is about 6.4%. Though market has rallied in the last 2 or 3 days on the back of some of the FPIs that are trapped, because CBN have not been selling dollars in the last 2 to 3 weeks because of the lockdown. For some of them, have just collected dividends. So rather than continue to wait for CBN to supply, we saw some of them come into the market, decide to come into the market from Thursday. We can see that impact even today in the market. Though we feel it would be short-lived, but especially for retail investors, if you have your exits price. For some of you, it would be a good time to also make some money and come back later when prices are also lower. Some of the sectors that we that we feel that would be also be interesting to watch out for, the agri sector, though in terms of expectation or the impact, we feel that the impact will be moderate. There's been increase in terms of demand for food. Consumption has been very high, and that would impact. But there's the gestation period for most of these products, and you can't just ramp up capacity overnight for some of the for the produce. So that's we feel that we won't see much significant impact. It will just be moderate. For food and beverages, yes, we would see the impact would be positive, uh, but in terms of the demand will wane over time, because a lot of people that are losing their jobs, a lot of people that are not earning income as they used to earn, even for those that buy the sachet um, quantity, they may not be buying as they used to do on a daily basis again. That may also impact in terms of demand. These very specific sectors that we feel that may try to weather the storm, even despite this crisis. Um, Consumer goods, because of the demand for their products, very necessity. So this time is area where most kids are all at home. Consumption is high. Some of what they sell, there will be significant demand for it. ICT is like the is the most benefited in this, or the most sector benefiting in within this lockdown. We're all using our current data for this webinar. We, in terms of calls, have increased. In terms of usage of data, most students, pupils are using data always for their to join for the academics. So that we feel that is really very positive for MTN, even Airtel Africa. We've seen the impact in terms of even the share price, because we expect that in terms of their performance in Q1, Q2 would also be very positive. The banking sector is also we know accounts for over 50%, about 50% in terms of liquidity and activity within the space. And for some of those companies, with the new CBN rule on loan to deposit ratio, we've seen banks change their model in terms of lending. They are competing very significantly with a lot of the fintech guys that lend non-guaranteed loan. We can see even for the likes of GTB also extending loans to the small and medium scale enterprise. So for retail investors, it's also an opportunity for you to take advantage of that. And if you are looking at business or for some of the sectors that we expect which we would see as we progress, that we expect that would enjoy a significant impact, you can look at businesses around that space and use the fund to finance the business. The attractive sectors that we feel would enjoy this based on the CBN support and the pharmaceutical, the health sector, they would also benefit, especially for those that uh, are selling, especially drugs, and that has to do with boosting the immune system. A lot of them would also benefit from this. So for the retail investors, so we just for I know most people are aware that for a lot of stockbroking firms have platforms where you can buy and sell securities. So you need to just um, identify your stockbroking firms that have online services, such that you don't need to be calling your broker once you want to take decision, and you are also able to monitor the market. You can see in terms of the charts, in terms of how we can see how the trend, and can help you to take position. You can also see transactions and helps you make informed decision in terms of the bids, offers, and trades within the markets. So going to some of the other opportunities that may be available for us as retail investors, yes, for some of them have their barrier, which is the entry barrier based on the minimum that you can invest. Fixed income for those that are risk averse, uh, you it will be useful for it will be helpful for them to also take advantage of fixed income. Yes, yield has moderated, looking very unattractive. We can even see today's stock rate at the primary market auction, 90-day at 1.93%. Looks very ridiculous. But for you, in terms of trying to, for retail investor, you still need to balance your portfolio. So it may just mean that you may be more aggressive in terms of investment in equities. If you have your portfolio skewed towards fixed income before, this is the time to begin to shift in terms of the weightings and the exposure to more exposure to equities than fixed income. But we were based on our expectation as we approach the end of the year with a deficit of expected deficit of 5.2 trillion. But we know that actual deficit may actually be up to 7 trillion. CBN ways and means have been supporting in the past years. We don't rule that out again in terms of the support that the federal government will get from CBN. But we are also expecting that government will also be desperate to raise funding as much as possible. And as a result of that, they will be forced to also increase rates. We are not expecting to see rates in double digits before the end of this year again, because it's also very positive. CBN have also begun to see in terms of the impact that is having on lending. We've seen deposit rate decline to almost 3%. So by the time the banks also had their spread in time before they lend, it's making lending rates also very cheaper, especially personal loans and to small and medium scale enterprise that used to be at the maximum lending rate before. We've seen that and the competition across banks in terms of refinancing loans across banks. So we expect rates to improve. So it means that for now, you may be looking at shorter term investments so that you don't lock in all your investments before rates would begin to change. Also, we've seen for Euro bonds, because of the sell-offs in the last 1 to 2 months, yields have moved to double digits. And for the high modified duration Euro bonds, means those that would react significantly to any slight change in interest rates. You may want to identify some of those Euro bonds and invest in them, though their entry level in terms of minimum investments can be high. But what about, we'll get to mutual funds. You can come in through dollar denominated mutual fund. Corporates with the low interest rate environment, so we've seen them taking advantage of this low interest rate environment to restructure their loan books, also in terms of their working capital. So for some of those corporates, ab initio have been relying more on overdraft for their working capital. But with the low interest rate environments now, most of them are using commercial paper. So if you may need to shift from the treasury bills space to more commercial paper, which are corporates, which are issued by corporates. The interest rate is a bit higher, though it may have its own inherent risk, but also look at in terms of the brand of the corporate issuing it. You may also want to look at the size to the size of the offer relative to the size of the company. You want to check the cash flow of the company. That may also help you to minimize your risk when you are investing. So would expect to see more corporate. So for retail investors, you may also want to take advantage of that. For coming to mutual fund, which perfectly fits for retail investors. So we have different mutual funds. But now I feel it may be the time for people to focus more on equity mutual funds because prices are really low, and if you are looking at long-term investment, this is the time that for most of the fund managers would also be putting in funds, and and when you look at it based on even dividend yield perspective, you will discover that you will still get double digits based on the dividend yield. So entry level for mutual funds is as low as 1,000 naira. Even if you are coming in through the likes of the Cowrie Wise that partner with fund managers, you can come in with as low as 100 naira. So that's for retail investors. It gives you access. If we are talking about equity fund, fixed income fund, which has to do with the money market, which is shorter, bonds as well as euro bonds. You can take advantage of that. These are just some of the listed available. Plutus is a money market fund. The NIDF is a bond fixed income fund, which is longer, and the HEF is basically equities, which is managed jointly with the research department and reviewed on a weekly basis. So trying to look at the impact of COVID-19 on some of the sectors, major sectors in Nigeria, starting with those that we expect that is positive. Spoke about the pharmaceutical, the ICT, and the health sector. They would benefit significantly. For the ICT is based on the usage of data and voice that has increased. And when you are looking at in terms of for health and pharmaceutical, CBN is willing to support them with funds at 5%. And that would really boost in terms of their business significantly. They don't have any business coming to the market using commercial paper. They rather stay with the CBN loan, which also has a moratorium of about a year before they begin to pay interest and principal. Some of those sectors are moderate. I think I've spoken earlier about that. And we can see for other sectors looking very, very red. So if you are looking at where do you want to pitch in terms of business for retail investors, you can see some of those positive sectors are where you can identify across the value chain, which of those areas do you feel you can afford to come in and set up your business or support existing business on your own, based on your own scale. So now wrapping up with this section in terms of building a recession-proof portfolio, investment strategy that we feel is critical and necessary. If you need to be able to timing is also very key. We've seen, despite the downtrend that we saw in the market, a lot of the domestic investors that understand timing were investing even in the last 1 or 2 weeks. For some of them are those that are trying to exit now in the market because of the capital appreciation that they've seen. Some of them even, despite in spite of the dividend that they've collected, the capital appreciation has also been very interesting. So if for you as a retail investor, for HNIs, they have portfolio managers that on a daily basis monitor their portfolio, have time to speak with them, help them in terms of updating prices of their on their portfolio. So for retail investors, you don't have that support. So you may need to be the one to check in terms of your timing, do your analysis yourself before you come into the market. Also, trading strategy. It's time from time to time to review in terms of your portfolio. There are some firms that on a weekly basis or on a monthly basis, they send you your portfolio. So it's for you to be active, you need to review and look at the prices. You don't have the portfolio managers, or if you are investing in a fund, that the fund managers will be checking the prices on a daily basis. You have to do that on your own. So it's critical or important that we cultivate that habit in terms of checking our portfolio ourselves, whether it's at night when you are done, or at least once in a week, to know your position, and you can help shape your trading strategy. Focus on value. this is very important. When in a down market, we need to be wary of what we call value traps. Value traps are companies that are perceived to be very cheap based on their current share price. But when you look at it in terms of the fundamentals of the company, in terms of liquidity, you may be trapped in those companies. So when market is down, there are a lot of companies that present values. There are companies that have strong fundamentals that you can take advantage of. I spoke about some of those shares, about maybe during the Q&A sessions. I will also be more specific in terms of stocks that we can look at and have 1 to 2 years investment perspective on horizon regarding some of those companies. So it's good that we look at value, understand the business that they do. So I spoke about MTN. So even when MTN was trading around 92 naira, it was almost going to below 90. But when you look at in terms of the business that they do, they said data is life, especially for Nigerians. Even if Nigerians have not eaten, they will still try to struggle. They will struggle to still get data, especially or even if they can't, they don't have credit for voice call. But that data is critical so that you can chat or you can also make calls on that. So you know that the kind of business that they do, and you look at what's the payout ratio in terms of dividend for MTN is almost 90%. So it means that as their revenue is boosted, as they get more revenue, they will also be paying that out significantly. So those are one of the ways to that is one of the ways that you can identify stocks with strong value. Market strategy or surveillance. So it will be good that we follow the news and you are able to ask questions to understand market perspective. What will be the impact of yes, OPEC and non-OPEC have just they are trying to reach an agreement, but there's people are saying reserves. Currently, there's really no reserves to take in more demand in terms of crude. And when you look at the overall demand, because of the lockdown, people are not using their cars, factories are not working. How will that even impact? Despite the agreement from OPEC, how will it impact in terms of the global oil prices, in terms of the pricing? These are some of the things that we may need to follow as retail investors, because you will not have a dedicated account officer trying to help you manage your portfolio. So market surveillance is really very critical that we need to take advantage of. And lastly, this for retail investors, we need to, like I mentioned earlier, begin to shift from the very risk-free investment in quotes, the treasury bills. So you need to be able to you must be willing to take in more risk or invest in funds with fund managers that are willing to take more risk. So rather than invest in 90-day T-bills at 2.7%, there will be 90-day commercial paper maybe at 3 or 4%, or even placements that may be at 3 or 4%. So that will help the return of the fund. So there will be need for us to have a shift, from the normal treasury bills to other long-term investments. Also, investments in the agri sector, we've seen a lot of the platforms have been able to structure in form of crowdfunding. For some of them, have been able to get insurance companies to insure the principal on that investment. But you need to do your due diligence. It's not all of them that are genuine. We know that SEC is trying to see how they want to regulate crowdfunding. There's the rule, or the expected rule have been exposed, and even as Afro Invest, we're sending in our comments, and based on what we expect, the best way they need to shape that. So you can also take advantage of that. This also still deliver above inflation rates return. So you are balancing your portfolio. So you are not just putting all your money. You have some in corporate offers. You look at the agri sector, you also support that, put a certain amount. Equities, you need to increase your allocation into equities because of the expected return. This low prices in terms of when you look at dividend yield is higher. So putting it into perspective, even if you have invested, you invest 1 million in the equities market and your current valuation may be 600. But when you look at the dividend that you get, even if the dividend is 100,000, that's 10% for 1 year. So you look at other alternative investments. If you have put that money, if it have been invested in fixed income, you would have earned just 40,000. But in equities, based on just dividend alone, though your portfolio is not looking nice, the diminution is there. But as long as you have not crystallized that diminution, based on the cost of investment, when you compare it to the total dividend received, it still helps you to get a return that is significantly higher than fixed income. And REIT, we know that it's also, though not very popular and in terms of the return, may not be interesting, but with the new Finance Act that is exempting them from paying tax, that would believe that that would also begin to help in terms of return within that space. And we've also been seeing for some fund managers trying to structure funds around low income housing, rent to home. So we believe that there would also be opportunity within that space. And lastly, we're all anticipating that there will be further adjustments. So we've been asked not to call it a devaluation. So there will be further adjustments in the naira. We've seen from 360 to 380, which is like 5%. We still expect to see an additional 10 to 15% that may take it to around 410 naira based on our projection. But the more the CBN delays in terms of the devaluation or the adjustment of the naira, the more percentage that they will require before there will be a balance. We can see the current account deficit has continued to accumulate, and that would continue to impact significantly on the external reserves that continue to deplete. So by and large, I feel that in terms of for us to be able to build a very recession-proof, you must be looking at investments that would yield above inflation rates. You also need to identify sectors that will weather the storm. We've talked about the IT sector. So no matter how bad the inflation and recession may be, we know that the financial service sector would still strive. We know that the ICT sector will still strive significantly. So you need to identify those sectors and you put your investment in them. So I'll be hoping for us to have more direct questions if I've not touched into some of the areas that you're expecting me to cover on. So thank you very much for listening, and I hope you've enjoyed the presentation.
Thank you so much, sir. Thank you so much, Ayodeji Ebo. We really appreciate that. That was an insightful presentation. We have a couple of questions already waiting for you in the chat box, but I don't know how best we could do this. Probably I read it out, or you also go through them from your end.
Okay, so I have to stop sharing. Okay. Let me start. Okay. So the first one, can we say that there? So the first one from Ekweme Michael, that can we say that there is currently a strong correlation between global developed markets and the NSE? If yes, should we expect further price falls in the NSE in coming days? I feel that there's more in terms of a stronger correlation with global oil prices than global markets. there are a lot of other factors that affect global markets because some of those markets are not dependent on oil. But for us, if you do a chart of the trend in terms of crude oil prices as well as the market, you would see a very strong correlation in terms of the trend in the in terms of the trend in the market. You will see a very strong correlation. So in terms of what you should expect in the coming days, with these low prices, I mentioned earlier that what we saw in the last 1 or 2 days is some of the foreign investors that should have repatriated their dividend and funds are currently still trapped, and some of them are trying to see if they can make short-term return while they wait for the lockdown to be over. So it shows that it's not going to be sustainable. The market, so if you know you can have your target exit price and still wait, it's sometimes it may look very unpredictable, but with the way market has moved currently, I feel that for those that are short-term investors, it may be good to book your profit while you wait for market, another opportunity within the shortest period. In terms of local bond markets, overbought is an overbought level. Uh, I would say it's in an overbought level. Currently, because of the lockdown, transactions have reduced, a lot of uncertainties within the market, especially even from the corporate angle, and with expectation that interest rates would also increase. Investors would try to stay a bit away from longer term investments. They may, if, except when they have idle funds that they try to cherry pick into some of the bonds that have attractive yield. Uh, but I feel that it's not really at that level. What do you think about the bamboo throw for purchase of? These are for foreign equities. Yes, we talked about investing in dollar denominated investment. So there's really nothing wrong in trying to diversify your portfolio. We can see for some of those stocks have suffered significant demolition. And we know that once things pick up, they would also pick up their home market, and the developed market is even more efficient. Naomi Akibawale is also asking, what stock will you specifically recommend and the value stock and why? Yes, for some of those stocks to touch on that, for the banking sector, that is always the toast of any most investors based on due to liquidity that it provides, and they've always been able to always work around every most of the challenges. So I feel that the top 2, 3 stocks within banking space, you want to talk about GTB, Zenith. You want to look at even UBA. You would see that in terms of efficiency, their ratios are also very interesting, and they've been able to ride on their online platform, especially for GTB. Even with the loan to deposit ratio policy, GTB has been able to bring down its personal loan to about that's 1.3% per month, which is about 21%. And even they've also been lending to SMEs now. So we'll see that also cover up for any income shortage that they may have in terms of charges. And even for me, I believe that even with this lockdown, most people are forced to use the online channel. So that increase in activity will cover up for the shortage that companies would have recorded in terms of the downward review in terms of charges, which is the expectation then. The expectation was that with the downward review would increase the prices of most of the, will increase the amount of revenue they will get from fees for online trading. You also want to look at the IT sector. I mentioned some of those stocks so that I don't waste much time. You look at the consumer goods space, the industrial goods. We know even Dangote Cement, though it's moved in the last 2 days, was stayed so low at around 112 naira for almost a week. So those stocks also present opportunities. Dangote paying a dividend of about 16 naira. So when you look at the yield, you won't get that in fixed income. Um, just for clarification, insurance companies do not insure the principal, rather they insure the agri product. Yes, so based on my understanding of how it's done, those products, the principal that is also collected is used to fund those products. So indirectly, those products that are insured to the tune of the principal, which is the tune of the amount, the money that fund has been committed to the product. So it means that at the point of sales, maybe if there's any crisis, it is based on if you have spent 1 million on investing or planting. It is only that 1 million that you have spent that is insured, the product that is insured. Um, so um, so that's why I say it has its inherent, it still has the inherent risk, but in portfolio, you want to look at the percentage based on your risk perspective. Because you also study the model that most of them are also using. Some of them are selling these products. They also have, so they've used the value chain. They have those that are selling. So they are cultivating and they're also selling some of those products. So they have farm for turkey and they also have um, shops where they sell the turkey. So, but you just need to do your due diligence properly. So I won't be recommending or putting names, but there are some of them that are genuine and they already have offtake agreements with most of the a lot of companies even before they go into that. In terms of dollar index, once the dollar index starts to fall, do you expect naira to appreciate? For us, we it is based on the inflow we get from oil. So when our export is majorly oil. So if in terms of our proceed from oil, as long as it's not improving and we are unable to accrete the reserves, so we don't expect, based on the signal it sends to especially to foreign investors, we won't be seeing a lot of inflows. So as long as you don't see much inflows, um, there will be pressure because we're an import dependent economy. We continue to import a lot of these things, and CBN will be forced to continue to supply dollars for us to import. And that is why when you look at the current account deficit, so that the current account will be in deficit because we're importing more. And one way to stop that is they need to adjust. So if you need 1 million, you need 360 million to import before. If I devalue to 380, that means I need 380 million to import. So as you make that adjustment, the capacity to import will be reduced. And as a result, you will be able to stabilize your naira. So if you don't do that, and you are not also getting the inflows, then that's double whammy. You just be depleting the reserves unnecessarily. Also, there's a question from Oluwafunde Adewale. So with the ADM budget being adjusted, higher deficit, are we going to see like a double-digit rate? No, I don't think that we'll see double-digit treasury bills rate like we saw in 2016. The structure is different now, though. If even if CBN tries to collapse the market, this current market has been segmented, the Omo bills and the Nigerian treasury bills. Even if they collapse it and allows us to buy the Omo bills, CBN is seeing that gains that they've been able to achieve in terms of keeping interest rate very low, banks being able to lend. So you won't be able to keep. Uh, you don't want to provide this a disincentive rather to banks. So if I see that treasury bills or OMO is at double digits. So can you guys still hear me? Hello, can you still hear me?
Yes, we can. Yes, we
Okay,
can.
thank you. Okay. Yeah, so if you see the government would like one to keep that cost very low. So currently, their cost of financing is also moderating significantly. Before they raised treasury bills at 14, 15%. Now you are raising capital at 5%. So to them, it's positive. Also, that it will be a disincentive for banks to continue to lend to you if if you have the opportunity to um, if people have opportunity to get double digit rates, banks will not also want to lend. They will also want to put that fund into that double digit investment. And even for the individuals, we have there's already a shift in terms of mindset now. Even for individuals that most times you get your 10 million, you just put it at 12 or 13% in T-bills. Now at 5%, people are beginning to check what kind of business can I do? What kind of business can I support? So we may not see that impact immediately, but that mindset alone can cause a major shift because if we continue, we all continue to put our funds and earn double digit rates, we cannot support the small and medium scale industry and they will not grow. They need the funding, though it's risky, but with also the credit bureau system, with the BVN system that we now have in place relative to when in relative to 2016, that would reduce the delinquency ratio significantly relative to when relative to what we have in 2016. Um, okay, for insurance companies, I feel that it's going to be policy driven. So as long as we don't have the compulsory insurance policy enforced, we don't expect to see much within that space. Though there are recapitalization, um, expecting it to help, but I feel the way even the NICOM guys have been doing, postponing, always shifting the goalpost. They've not, I don't take them very serious. So really that sector, I feel that one shouldn't focus too much on it, though there may be opportunities if the policy is implemented. One from David J. Bullish, on your opinion, what is the reason? I think I mentioned this reason why we saw that particular um, the rally we've seen in the last 3 days, foreign guys trying to buy. Um, okay, from Minam D. Ebenezer, what's the minimum due diligence that retail investors can do to avoid investing mistakes or value trap? So I feel that it's first understanding the business that the company, most of the companies, what they are into. If you understand their business, you can be able to, you say, follow the money. You can trace and see where their cash is coming from or where their revenue will come from. You can also try to also look at their quarterly report is often available on the NSC, where you can see their PAT, you can look at their EPS, and you have the time, if you look at their 3 to 4 years, you can see what's the payout ratio. Payout ratio is in terms of the earnings they have, what part of it is paid out. So if you average that and if you average that, you can be able to project what you should expect in the new year, as long as you see that positive projection in their revenue. Uh, so so I feel it's for retail investors, what are the penny stocks? Most times we always try to get, okay, penny stocks that can double. Sometimes we need to also be careful. ROI is what is key. Even if you have one unit of Nestle, and Nestle was 700 and something about a week ago, and it's almost 900. Um, if it's only one unit you are able to buy, you look at the ROI. If the ROI is 30%, so whether you split that 700 naira into buying 100 units of the stock at lower prices, yes, it may be easier for some of those stocks to double, but you have to also look at the value. Most investors were going for Zenith because it was easier for Zenith to maybe easier for Zenith to do 100% at 22 from a level of 11 relative to GTB at 18 to get to 36. Fine, but you need to be wary of just trying to focus on penny stocks. Value value is critical, and even if the share price looks very expensive, for some of them, based on what they do and their shares outstanding, it's easier for them to also double. We can see Stanbic has about 10 billion shares outstanding. I think are they doing bonus now? By the time you had that, it's still not very relative to what you can see GT Bank at 29 billion shares outstanding. So you typically expect that their share price will be higher anytime, any day. In terms of ROE, they are the best in the industry, or almost almost pairing with GT Bank in terms of return on equity. Looking at the Naira recently strengthened since March. Sorry, I don't strengthen to because if I do, okay, I'm not there with that question. Do you think there is a more capital market regulators can do to arrest long-term trend of downturn in the NSE? I think it's also we'll just continue to do more of investor education. The NSA has been doing a lot in terms of investor education but there's still a lot that needs to be done. Most of these parastatals needs to assign major funds to see how they want to increase in terms of investor education. There are several roadshows that I've also been privileged to be part of to other exchanges in developed climes, and we can see we all saw, even with the regulators, principal officers then, how most of those countries spent significantly on investor education. So that if we have a lot of understanding and retail people participating, we would be able to outpace the foreign investors. So when the foreign investors are pulling out, they won't have any significant impact on our market, because if they are assuming maybe they are in terms of weightings about 30% that they have in the market, then there will be no major shock. So we won't be seeing that major shock. It will only be attributed to fundamentals, economic fundamentals that will be seen in the market. So if we are able to see more retail participation from local investors through investor education, I think it will help stabilize our markets. Yeah, so I think if I can get the slide and link to this section. Yeah, so for investors that prefer to hold investments in paper cash, which should be more profitable in long term, US dollar, euro bond, and yeah, we know that most times when you look at the in terms of the movement, so our own Naira is mostly pegged to the dollar, and whatever adjustment that is happening to the dollar most times also have that you see that impact across other currencies. So we're expecting the devaluation, if we say, for instance, devaluation about 10 to 15%. But when you're trying to invest now, currently, you will have to buy inflow dollars. Inflow dollars is about 423 naira to a dollar. That's 423 naira to a dollar because of the scarcity. So you have to be sure that you are getting even your dollar at the right price, so that when there's eventually an adjustment and the gap between, you see the gap between the parallel market as well as the A&E market collapses or things out, you are not out of the money, because if you are investing euro bond and the investment, let's say the yield is 12%, and you're already going to lose in terms of the exchange rate that you are bringing your money from naira to dollar. When you look at that, you may actually just be making single digits return at the end of the day, even after the devaluation. So I feel that you must be able to get your dollar at the right price. If you are not already in dollars now, you may be getting a little bit late. Sorry, there's okay. From Yinka Joseph, my question is that Nigeria Stock Exchange has been known to be dominated by FPI. If, however, due to COVID-19 and its negative sentiment, most of the FPI has exited the market and are remaining on the sideline. So in terms of, so what we've seen in the last 2 or 3 weeks has been local investors. For those that missed the rally and the opportunity in 2016 or even in 2012, some of them have been looking at the market, buying for the long term. And that is what has been driving the market in the last 2 or 3 weeks. Though it's not sustainable because when you look at the funds available to them, may not the funds are limited, but you also know there's a lot of funds move to fixed income. So as you get maturities, some investors are discouraged with the low fixed income investment. So as you get those maturities, they ask you to put a part of that investment in equities rather than putting it in fixed income. So we feel that yes, may not be sustained. Typically, what we used to have in the past is you see foreign investors come into the market, enjoy the rally before local investors come in. The case is different this time around. The local investors have been buying the last 2 to 3 weeks. Foreign investors trying to come in now. It's yes. For them, it is also a short-term play or trying to also see if they can make a return that may cover the devaluation if there's an adjustment in the naira. So I don't expect that. Excuse me, I don't expect that the rally will be sustained. We'll see some form of um, volatility in the market. So I expect that even before Friday, market should slow down a bit, and there should be some form of profit taking. A market goes down, then we'll see other people take advantage of the opportunities as we progress. Because when you also want to look at in terms of the economy, the projection, we're expecting that a growth rate will decline, economic growth rate will decline by 8%. So it means Nigeria entering into a recession. By the time we have two negative quarters of negative growth rate. So that is not a very positive signal. Oil prices have not increased. The government, how do they intend to fund the budget? In fact, allocation to the states, they will need to, the excess crude oil account has been depleted. Maybe they will go into the NSIA money to also get some funds to support, because there are some states that cannot survive without paying salaries. It is when the government workers collect salary, they go to the market. So if they don't pay some of those states don't pay salaries, that state, the economy of that state cannot be sustained. And that is why government will do whatever, whether they will give them another bailout, whether they will look for funds to support a lot of some of those states that cannot survive on their own without a park allocation. Yeah, so I think maybe lastly, not to take too much time, it's how can funds be raised for SMEs after COVID-19? I feel that there's currently even the CBN is trying to sign up SMEs and provide capital for them. There's the website is available where you can sign sign up, you submit online. I know there's been that controversy between if they are charging 10,000 for processing fee or not. But I feel that you can also try it out, and take advantage of that opportunity. As you can take advantage of that opportunity to fund your business, but you have to have a business idea. You need to also provide a business plan before they would also advance you the loan. Yeah. Okay, thanks, Samuel. So she is just trying to buttress my response that they actually earmarked about 15 trillion. Oh, sorry, I was mixing that up with the SME fund. So they are earmarking about 15 trillion infrastructure fund to be established. Uh, That's in terms of, I think this will be the last question, so I don't uh, take um, take us more than the time. For the infrastructure fund that they're trying to set up, their focus was to use the pension fund. But when you analyze it critically, these pension funds, they've invested close to 70 to 80% of this fund in FGM bonds. So if you are going to use that, set up an infrastructure fund, the pension fund guys that you expect them to invest in it, it is only the new maturities that they may be able to invest. Are you saying you are going to switch some of the existing bonds and move them? It's really not tidy. So when you look at it critically, I think governments have not analyzed it properly. For most of them, they are just attracted to the 14 trillion that they hear. But when you look at it, over 80% is already with the government. So you already have that money with you. You've used it for other things, whether to pay salaries and so on. But that fund cannot be available for infrastructure funds. So they may need to get new funds, whether through the PFA, the PFA, if they're also able to set up the health insurance scheme and uh, to um, to boost that, there will be a lot of contributions that that fund can also help, and they can set up like a project fund that will be able to set up hospitals that are viable. Yeah, I think I've been able to deal with most of the questions. Apologies if I've missed out your questions, but I'm also trying to be mindful of time. Thank you, everyone, that you made this very interactive by sending in your questions.
Thank you very much, Ayodeji Ebo. We really appreciate. This has been an insightful session so far. The questions and the answers has been insightful. Also, I would like to call on Ibrahim Durosao to help us close this session for today. Yeah, thank you. Ibrahim, over to you.
Yeah, thank you, Yinka, for session. Firstly, I want to say thank you to Mr. Ayodeji Ebo for an amazing session we've had tonight, the MD of Afri Invest Securities Limited. Thank you for creating time to give us some enlightenment around the investment opportunities we have, even in the midst of this crisis that we're facing globally. We want to say thank you to you for giving us some of your time to share with us. It's been a very productive session. We've learned a lot that will be useful for us in our individual capacities and even on our various roles. I believe a lot of portfolio managers are on this call from different organizations, and it's been a great time listening to you, sharing your perspectives. And to all the participants, we want to say thank you for joining the webinar. I hope you have found one or two things that you've learned that will be useful to you. We will pass on the slides by email. I believe everybody that is joining the call registered their email. Please, if we send you an email, likely some email filters could pass our email to your spam. So please check your spam, enable the access so that you can receive our emails. You will get the slides, the audio recording of the session, and at some point when we are done transcribing, you also see the text of the session sent to you by email. I also implore you to join and follow on all our various social media platforms. We're on LinkedIn, Instagram, Twitter, so that you can get real-time information on what's coming up. On that note, I want to say thank you to the team who organized this. Thank you to all the people who joined from Nigeria and abroad. And thank you to Mr. Ayodeji once again for spending and sparing some of his time with us and for sharing his perspective. On that note, I want to bring this session to a close. Thank you and have a good night, people.